In this video, we'll be discussing the top stocks feature within the StockBox. Now, this is the prime piece of real estate when it comes to this tool because it ultimately achieves what we are after with a software like the StockBox, which scans a multitude of different technical, sentiment, and financial readings to generate stock ideas that could have great opportunity to come. So first and foremost, at first glance, this table can look a little bit convoluted or complex, but I promise you, if you stick around for just a minute, this will make a lot of sense at what we're looking at. The top stocks algorithm, again, watches a huge selection of financial data like trailing 12-month PE ratios, forward PE ratios, price to sales, revenue growth, earnings growth, debt to equity, the return on equity, price to free cash flow, and the dividend yield of each company that we track or each stock that we track within the StockBox. Additionally, the StockBox is monitoring sentiment readings within the market as well. What do I mean by that? Well, we're watching institutional activity, which shows us whether or not institutions are actively buying aggressively or selling a particular stock, as well as analyst ratings on a company. And whether or not the analyst community thinks there is upside for a stock or downside gets factored in to the analysis automated by the StockBox. Then, of course, the StockBox is also monitoring what is happening on the technical price action basis. We have two columns here. One is momentum, which is clear the trend overall of a particular stock, and an overextension column, which looks at whether or not a stock may be short-term oversold or overbought. Finally, the score column tallies up everything that we just got done discussing between technicals, financials, and market sentiment to generate an overall score for each stock that we monitor. The way to read this right now would be that Meta, Intuit, Taiwan Semi, Microsoft, SMCI, AMD, you get the point, are getting stronger scores based on the selection here that we've got in front of us. Now in the top right, I've selected for technology, but we can also remove this and actually just look across a wide range of different sectors in order to see some of the top rated stocks at any given time. Now, because this video is meant to be brief, you can always review the full scoring in more detail for each one of these columns on our website. And you can also find the link to this down below in the description. Head to a1trading.com/stockbox-tour for more information. So how can we use these high scoring, or if we reverse the score, low scoring stocks within the StockBox to find opportunities in markets? Well, simply put, the top stocks page is essentially a organized watch list. What it means is that the StockBox, after reviewing these list of metrics, is finding confluence in a particular direction, or whether it be bullish or bearish. So if a score is very high, that's suggesting that the StockBox thinks there could be some upside based on the selection of criteria we have here. In no way does this guarantee that the stock is going to have upside, as the future is unknown, but it generally means that the StockBox, after reviewing the financial readings, sentiment, and technical readings that it tracks, has potential to continue moving in that direction. Again, the StockBox is not a copy-paste magic money printing machine, but rather a confluence tool meant to be used as a way to spot potential opportunities and to add some insights to a trader or an investor's analysis. So I know that can be a little bit confusing what I just got done explaining, but let me show you personally how I might use the top stocks page to find a trading setup. I noticed that Meta is currently getting a +8 score. That means that most of these metrics, and you can see it visibly, most of them are green, suggesting that a lot of the things here look relatively attractive for Meta shares. Specifically, I really like that the technical readings are showing momentum is a +2 score, meaning we have a strong upward trend. We'll look at the chart in just a second, and we are not too overextended to the upside either. So let's pull up Meta stock, and with this high score in mind, I'll show you how I might look at the stock. So I've now pulled up Meta Platforms, ticker symbol META, and Meta is in a clear upward trend. In fact, the criteria for upward trend, like I said earlier, can be found in the Scoring Explained page on our website, which will be linked in the description down below. But we have a nice overall upward trend. We're looking at the daily chart here, and the trend is clearly up. And I mentioned that it's not looking overextended on our scoring, which means, again, if it were up at the high points, most likely it would be getting some sort of overextended reading. But now that we've pulled back a little bit, we're in the context of an overall upward trend, and the financials look look relatively positive, this could be a potential trade that if I like the setup and agree with it, I could potentially look for an opportunity to get long the stock. Full transparency, I am already long the stock and it's a company that I really like. But from a trading perspective, this would be the process at which I would use the top stocks page to get directed to, hey, look, Meta might be something to consider. I pull it up on my own side. I agree with the idea, and this actually would be a potential trade setup for me. Let's do another example. DG is getting a overall score of +8. And what's really interesting here is that we're getting both a strong momentum and an overextension to the downside reading in combination with financials that look relatively attractive relative to 3-year averages and sentiment that also looks good. The stock is clearly in a nice upward trend in recent times. And with a pullback, this might actually be a nice entry for me. That does not mean, however, that I'm going to go buy the stock at this level. In fact, I would actually mark my chart for a pullback to this 105 level as a more interesting potential opportunity. So again, this is an example of, yes, the StockBox is giving me a nice reading and has directed me to maybe check out this stock, but I still wouldn't buy it at this level. I would wait for a better entry point at what I believe to be that 105 area of support. Now, I just mentioned briefly about the financial readings. I wanted to give a high level view of how we're thinking about stocks within the top stocks page for those who are interested in the financial screening component. So at a high level, underneath the hood within the algorithm behind top stocks, is we are looking at financials relative to a company's 3-year historical average. So for this example, let's talk about ticker symbol ADBE, and I'm going to be looking at the trailing and forward PE ratio, or price to earnings ratio. If you're unfamiliar with price to earnings ratio, I would encourage you to pause, watch a video, or do a quick Google search or ChatGPT what this means. But a trailing 12-month PE ratio is a very conventional way to study the valuation of a company relative to its earnings. The higher the number, the more expensive relative to its earnings that the company is evaluated at. The lower reading means that it is valued lower on its earnings per share basis. What we've just navigated to is under financial history. We're pulled up our PE ratios chart and I've selected for ADBE. What the top stocks page is ultimately doing is it's looking at a collection of financial data points relative to their 3-year averages. And if the stock is more attractive, it's getting more of a positive score, and if it's more expensive or unattractive, it's getting a more negative score. So what we can see here is that at the time of recording this video, Adobe, or ticker symbol ADBE, is getting a 22.65 trailing 12-month PE ratio. The 3-year historical average for the stock is 48.5, showing that on a relative basis versus the 3-year average, the stock may actually be trading, well, it is trading very cheap relative to its own history. The intelligence that's built into the top stocks algorithm is we're doing this across a big set of financial data. We're looking at the trailing 12-month PE, the forward PE, price to sales, revenue growth of the company, earnings growth, all of these data points versus the stock's 3-year average. This helps to identify whether the stock is valued expensive or growing well versus its own history. The best way to see if a stock is improving is, for example, rating itself versus its own history. If a stock is growing its earnings really well, but the stock price is not super inflated with it, it could offer a nice opportunity to get long a growing company. But if a stock has gone way up in share value and even outpaced its own earnings, for example, the stock may be overbought and may be overextended. There may be better opportunities out there. That is what the top stocks page is ultimately helping us to do. Of course, financials are not necessarily perfect timing indicators by any means, so this is why ultimately the top stocks page is not a timing buy it and you'll make money tomorrow type of tool. It's rather a tool that screens a bunch of stocks and generates some of its best possible opportunities, then giving the user the opportunity to go explore those stocks and see if they agree or like the idea that is being represented by the top stocks algorithm. If you'd like more information about how the top stocks page function, remember you can find more on our website, a1trading.com/stockbox. If you have questions or want to speak with a member of our support staff here at A1, click the link down below in the description to speak to our team. And if you're ready to get access to the StockBox, the link will be in the description, or you can navigate to a1trading.com/stockbox.